Hi everyone, this is Rohit from Lifestyle Mastery. And I'm excited to have Nathan Cresswell, who's a VP Products at Vector, which is a trucking and logistics startup. Nathan is also a partner at Swell Ventures, which focuses on seed stage B2B SaaS only and invests in great companies that solve important business problems. Nathan was earlier partner at Flight VC, where he co-founded and managed the SaaS Syndicate. Nathan was earlier in product roles at Zuora and Salesforce. He's done his MBA from Insead. Welcome to the show, Nathan.
Thank you, Rohit, and thank you to exposing me to all of your audience.
Yeah, no, it's wonderful to have you here. Wanted to know, how was your start? Because you born in Australia, and you went to this crazy world of startups. How did the entire journey go around for you?
Yeah, I mean it's a bit of a fun journey. I won't go too far back because I'm sure your audience doesn't want to know my entire life history. But essentially, my kind of journey to the VC world and investing world started with my MBA at Insead. And so for people who are not familiar with that, that's a European MBA that's based out of France and Singapore. It's a very well-regarded MBA. And I did that and I got the kind of investing bug there. I met a lot of very interesting people which is really the main reason you go do an MBA, is you do an MBA to meet interesting people, and people that wanted to start companies, people that just had really good ideas. And my first investment there was with a friend in my year that ended up creating an application for Indonesian farmers, would you believe? And so this app was essentially an SMS app. This was more than 10 years ago. So even before, this was around 2009, before you had, proliferation of smartphones and things like that. And so this was an SMS app that would help them with their crops and help them improve their crops, tell them the current prices of their crops. All very, very interesting. And so when I left Insead, I put a little bit of money into his company, including going out and visiting farmers in Indonesia, which was really fun. Yeah, so I actually visited the users, and so that was good. And I made a small, 5K investment there, and never imagined that I'd ever see that money again. And then fast forward 7 years later, I actually did get my money back. I got they ended up getting acquired by one of the food conglomerates in Southeast Asia. I forget who precisely. It's on my website. And I made $7,000 out of my $5,000 investment. And so that was kind of where I started to get the bug for investing. And so it all kind of started there. And then that kind of led into the sort of syndicates that I ended up doing, a couple of years after that. So.
Yeah, no, I think it's super interesting. Insead is, I think, in the last couple of years done a great job when it comes to entrepreneurship. Seen a lot of Insead alumni doing really well, especially in the European ecosystem. And I think they are in par with Howard and Stanford when it comes to building unicorns, but I don't have the data to back that up with.
Yeah, one of the famous exits there is BlaBlaCar out in France. So that was an Insead alumni, and that was also a funny story. They found that idea because France transportation is always on strike, and so the guy thought of this idea: why don't people share rides with each other? Right, if they're going in the same direction, and that's something that technology can help with if we're both going in the same direction. And so it was all because of a French transportation strike that birthed that startup. And so they have a very interesting story as startups go. So.
No, absolutely. I think BlaBlaCar is popular in Europe, but it's also popular in India, where I come from. But
really?
But yeah, it is very interesting. And so you got your work from there, but how did you start your work in Zuora and Salesforce? How did you get those opportunities, and how did you move to the US ecosystem?
Yeah, so the first I should explain probably what I do in kind of general, so that people don't get confused and they're like, is this guy a VP of product, or is he an investor, or is he both? And the answer is that I'm anything you want me to be, Rohit. So my day job is as I'm a VP of product at a Series B company at the moment in trucking logistics, actually. But when I finished my MBA, that's where I started my my kind of road into product. So I started at a very small company called Aptus, and they did primarily applications on top of the Salesforce platform. That's how I then got into Salesforce, in product management at Salesforce. And I stayed there for about 1 to 2 years in an area called data.com. So at one point, data was going to be the fourth cloud of Salesforce. But like most people wanting, the other three clouds are, of course, sales, service, and marketing in Salesforce. And so at one point, data was going to be the fourth cloud, but for various reasons, it never eventuated, like many things in life. I stayed there for about 2 years, and really Salesforce is where I learned how to be a Silicon Valley product manager, because, and I encourage your audience, if they're thinking about product or someone's thinking about product, you need to go to a big company like that to teach you how to do product management. They will teach you their flavor of product management. And so I very much am a product of Salesforce today. And so from there, I went to Zuora, where I managed their Salesforce applications, and then eventually went into their core billing platform, and I managed one of their core billing products. And that kind of led me up to today, where I'm now the VP of product at a small Series B trucking logistics startup. And so, yeah, that's kind of my journey in product. And then along the way, I've found that, you know, many kind of opportunities have presented themselves to me in terms of investments. When you're a product person and you're deep into CRM, or you have domain expertise, people will naturally seek you out, and they'll say, hey, you know, I've got this idea. What do you think of this idea? And one of those ideas was really interesting, that someone reached out to me. It was a company called Implicit, Implicit. And it was an Israeli guy, and I met him, and he said, you know what, I can predict when an opportunity is going to close in CRM. Hopefully your audience is familiar with CRM software, and they create things called opportunities in CRM software, and they represent deals that, you know, are sales deals. And this guy said, I can predict when an opportunity is going to close. And I said, no, that's BS. You can't do that. And then he showed me how he could predict it, and with very little data. And I was like, wow. Like I said, look, I don't know if this really works, but if it does work, you're going to change the game in terms of CRM. And I knew that immediately within 5 minutes of speaking to him. And so that was my second deal that I did after the Indonesian farming deal. That was, and what ended up happening with that deal was they ended up getting acquired by Salesforce for a couple $100 million. And so they did very, very well. And I ended up, you know, I put in a very small amount, but I ended up, you know, 4xing, 6xing my initial investment on there, which was just absolutely incredible. And that was the danger, because when you have a successful deal like that, you start to think you actually know what you're doing. And so then that was succeeded by a whole lot of very bad investments, but I learned a lot from every investment that failed. But that was my second investment that I did prior to starting the syndicate world, and getting into the syndicate world.
Yeah, no, it's super interesting because you know, there's a popular article from Tim Ferriss where he says that, you know, instead of spending, you know, $100,000 into MBA, like the MBA fund, you should have an angel fund. But it's interesting that you did your MBA and you did focus on investing into startups. But what's the usual amount of investments that you did, you know, when you're working with companies like Zuora?
Yeah, so personal investments, I mean, I started out very small. I started out, you know, 2,500, 1,000. And Gil Penchina said this, who I invested with for a very long time. He said, like anything, never bet more than you can afford to lose, right? Because these are very, very risky investments. And if anyone in your audience is considering investing, assume when you're investing, you write it off, right? Just write it off, because if you are investing with the sole aim that you think you're going to 100 times your money, you're probably investing for the wrong reason, right? Because the chances that you're going to 100 times your money, if you're making an investment of like $1,000 or, you know, a couple $1,000, is very, very unlikely, right? And so, you know, that like anyone else, I started out very, very small. So $1,000, $2,000. As I've gotten more confidence, and this is after I've probably looked at over gosh, over the last 10 years, I've probably seen, maybe 500 startups, maybe 1,000 startups, that most of which I didn't invest in. I've had the confidence now to start raising the amounts that I invest in. So now I write $5,000 checks, $10,000 checks. I did a crypto investment. I wrote a $15,000 check, right? And that's because I start to have conviction in my bets that I make. Either because I can see very early on whether this startup has the right stuff, right?
Right.
And that's very difficult to do the earlier you go, because there's nothing. There's no product, there's no revenue, there might be only a deck. All they have is a PowerPoint deck, right? And so you've got to look at that deck and say, can this thing be an acquisition? Can this thing be an exit of some kind, right? And I've started to have more confidence in that. But having said that, I still make mistakes like everyone else, but I never bet more than I can afford to lose, and you should be investing for reasons other than just the monetary gain, right?
Yeah, I was just about to ask you, what other reasons should people look at, investing other than the monetary reason? Is it more about learning about the industry? Is that the right reason?
Yeah. I mean, I remember speaking to some angel investors, and when we pre-COVID, when we used to have dinners with other people, and I said, what are your top 3 reasons for investing? None of them said money. None of them said money. They said, one guy said his number 1 reason was to be invited to cool dinners and parties. So that's a good enough reason, right? Another guy said his reason was just to speak to, intelligent people, smart people, people with great ideas, right? People that want to change the world and, want to go about doing it. Another guy said just simply to learn more, learn more about the domain that he's investing in, or to learn more about the particular company that they're investing in, right? Because I mean, you're much more likely to get a CEO's time if you say, hey, I backed you, even if it's a small amount. Most CEOs, and people don't realize this, most CEOs are very, very grateful for anyone backing them, right? They're very busy, right? And don't get me wrong, like there's a difference between whether you're investing 5,000 and 5 million, but a CEO worth their salt will, even if you say, look, I backed you for 5K and, I just want to ask you a few questions, they'll give you your time. Any CEO worth their salt will give you their time because you back them when no one knew them, right? And they appreciate that, right? Most CEOs appreciate that. So.
Yeah. Well, that's super insightful to know. And you talked about Gil Penchina. He's like a legend when it comes to angel syndicates. How was the experience working with Gil and Flight Ventures?
Gil is a force of nature. Gil, if you're listening to this, hi, how are you doing? But Gil, he's a real force of nature. I mean, he tells the story of how he got onto angel syndicates, where he was one of the first kind of syndicate leads on that platform, and he launched a syndicate. And he said he went to sleep one night after launching the syndicate, and he didn't expect anything to come of it. He thought the next morning, someone might give him, $2,000, $5,000, $10,000. He woke up the next morning and found that he had accumulated something like $250,000 of other people's money for this particular deal. And this was like, we're talking, like 5-10 years ago, and so he was like, wow, there's something here. He said, if random people on the internet were willing to give me $250,000 or something like that, I forget the exact number. He goes, there's definitely something here. And so then he went all in. He went all in on syndicates. His theory was to create a portfolio of syndicates. So he created a syndicate for just about every investment thesis that you could imagine. He created a crypto syndicate. He created a B2B SaaS syndicate. He created a B2C syndicate. He created a late stage syndicate. He created a syndicate for any kind of thing that you could imagine, right? And that was really, really successful, in terms of the number of deals that he did. I think that the SaaS syndicate was probably the number 2 syndicate in there. The biggest syndicate was his own syndicate for Flight VC, but SaaS syndicate was well up there with the number 2. And we had a team of people that were literally just looking at deals day in, day out, trying to evaluate deals, bringing the best deals to our LPs, and all of that. And so I was helping to run the SaaS syndicate as part of my duties, and that's where I really cut my teeth on syndicates and how to get an LP base, how to use that LP base to then do more investments. Right, it's all very much an art form, in trying to run a syndicate.
Yeah, no, and that's what I wanted to understand. What's the secret behind running a syndicate, and how do you reach out to LPs? How do you construct a deal? What's the secret behind it?
I can't give away all my secrets, but I will say that it's a lot of it having a celebrity helps. Is what I'll say. So having a celebrity like Gil Penchina that was well known in the market, right? That celebrity factor definitely helps in getting LP money, right? I mean, like any VC, you have two ends of the spectrum. You have deal flow, and then you have LPs, right? So what you have to know to run a syndicate is, what is your value add? Can you pick great deals? If you can pick great deals, then the LP money will come, right? Or do you just know a lot of rich people? If you know a lot of rich people, then you'll have money to invest in great deals, right? And then you don't have to worry about chasing great deals. You can just follow rounds, right? Like find a round and say, hey, I'm going to put 100K into this round. Like, don't worry. People want money, no matter what, where they go. So, I mean, I would say a lot of it is very hard, but you do need a base. And so how I started my syndicate was, I took that base from the SaaS syndicate, and then I moved that over to Swell Ventures. So that's how I started my base of Swell Ventures, right? And I had this track record. And then now with Swell Ventures, I personally have connected on LinkedIn with every single one of my LPs, or tried to, the ones that have accepted my connection, right? And so I like to keep in touch with them. I just sent out a deal note for a very interesting deal in the event management space that I'm going to put personal money into, called candywagon.io. That's a shout out to anyone that wants to co-invest with me in the deal. But super interesting. Founder knows the event space. I'm getting that same smell of, oh, there could be something here, and very interesting approach of how he's going to approach the event management space. And so, I'm going to do a personal deal in that deal, and I'm going to share it with my LPs. Anyone's welcome to co-invest with me in that deal. And I think he's going to do very well. He's going to at least be an acquisition, if not an IPO. So.
Yeah, I think that's super interesting. And you talked about you have experience in B2B SaaS, but what is the thesis behind Swell Ventures? Do you also look at the deal which you mentioned about Candy Wagon? Do you also look at event management or a consumer-based startup, or do you only focus on B2B SaaS?
Generally, I'll only look at B2B SaaS.
Okay.
Having said that, if a deal is a good deal, I'll look at anything. If you've got Andreessen Horowitz investing with you as your lead, I'm definitely interested in that. No matter what the deal is. But generally, what I've learned is I focus on what I know, which is B2B SaaS businesses. I don't understand consumer businesses, to be quite frank, to this day. I don't understand what causes a consumer to download an app and then use it over a different consumer app. I try and stay out of that. But I know businesses, and I know business problems. And I know when a company is actually solving a real business problem, right? And so for that, I really think that I have a good sense now of what is a business problem and what is a startup, if this startup is most likely going to solve that business problem at scale, right? But the one exception to that I've made is crypto. And I've done a couple of crypto investments, mostly just through friends introducing me to the deals. And when it sounded like a great deal, I put some money in. So one deal that was like that was a friend of mine introduced me and said, hey, you should meet the CEO. He wants to create a crypto bank. And I said, okay, that sounds interesting. So I met this guy. I went down into the Mission District. I don't know if people know the Mission District in San Francisco, but it's equally very nice and very horrible. So I literally passed on my way to the company office a pile of burning tires. It was a tires that were lit. Someone had lit on fire, and I was like, okay, this is a rough neighborhood, and went to the CEO's office, and he explained to me this idea. He said, look, I have this idea that if you have crypto, you should be able to do something with it. You should be able to put loans against it. You should be able to deposit it and earn interest. And I said, wow, again, I don't know if you can make this work, but if you can make this work, this is a fantastic idea. And so again, I put a very limited amount with my amount, thinking that don't bet more than you can afford to lose. I put 5K of my personal amount. That company ended up being compound.finance. So if you go to that website, compound.finance, you'll see that they have a coin now. And at one point, that coin was worth $800 per coin. And so I got a certain amount of coins for my $5,000, and you can imagine when the coins go up to $800 per coin, just how much of a return that was. And so that, again, that was kind of the deal that makes you think you know everything, and then you realize you don't know everything, and make a subsequent series of very bad deals after that, which I proceeded to do. But I truly think crypto is going to be amazing for the economy, because it upends all traditional forms of investment, because you can now monetize through the coin mechanism. The coin itself is your mechanism for investment and the mechanism for raising. You literally can get by with a little bit of pre-seed money, and then you get the money to run the business through the coin offering itself, right? And so then you don't need to do a traditional series B, C, D, E, right? You can literally just raise enough money to get you through, maybe for the life of the company, through the mechanisms of the coin and how the coin works. The unfortunate thing about crypto is that it's just such a complex space these days, is that you have to be in it full time to really understand it. And so for me, I'd love to do more crypto deals, but it's just I'm not in the industry day in, day out looking at new startups, new technologies. But you really have to, because it's just a Cambrian explosion of ideas, of startups, whether this is going to win or that is going to win. It's just such early days still, but you need to be in it full time to really understand it.
No, I think that's a very interesting insight, because I'm very interested into crypto, but I really like the concept of DAOs and the NFTs. But there's just a lot of noise about it. But I think, as you rightly pointed out, you need to go deeper into it, understand what are the fundamentals, and then invest.
NFTs, to be honest with you, I still don't understand. I don't understand why people would pay $3 million for a digital image when that image is so easily copyable. Like if it's a JPEG, well, I can copy the JPEG pretty easily. But there's some cachet with being the original owner of an NFT, social proof, and I think that's what's driving a lot of it. But I can't say that I really understand that space at all.
Yeah, no, absolutely. Yeah, that's something I'm eager to learn from others. But yeah, I mean, you talked about doing due diligence, but you also have a full-time job, so how do you manage to do due diligence for startups along with a full-time job? You are such a senior, management role.
Yeah, I mean, I do it, in my spare time, which is very little that I have. But on weekends and things like I said, it's not a case of 3 deals a year, 13 deals a year or 14 deals a year. It's more like 2 deals a year. And so it's only when those deals happen that I have to spend a lot of time doing due diligence and all of that. And I will say, like with most VCs, you start to get pattern recognition, right? Yeah. So like I said, I've looked at, maybe in my early days when I was really doing this hardcore, and I don't do it any longer, and I probably should. I used to write deal notes for every deal. And so I would look at it and I would say, okay, who are the customers? And I would go deep. I would say, like, who are the customers? What's the market? What's the product? Have I tried the product? Does the product actually do what it says, right? And so I'd go very, very deep and write a deal note, because that's what you had to do to sell it to other people, right? I've noticed that now I rely more on my pattern recognition. So I'm more likely to look at it and go, that space is a really crowded space, and this is not. I passed on another deal that was a very good product. It was ML for audio transcription. So basically, it would analyze your audio conversation like we are doing here, and then it would tell you the topics, it would tell you the questions, it would basically output a summary of the conversation. So I looked at that deal, and I looked a bit into the space, heavy with competitors, and also I felt like the founders needed to be a little bit more strategic, right? in terms of their thinking and how they were going to navigate, all these other competitors that were in audio transcription, of which Zoom is one of them. Zoom does audio transcription as well, and their answer to that was, well, they won't be able to do what we can do, because it took us a year to do it. And I was like, well, they probably could. It's just that it's not a strategic priority. And then if it's not a strategic priority for them, why is it a strategic priority for you? And so, asking those sorts of thoughtful strategic questions tells me a lot, because anyone can say, this is a problem and I have a thing that solves this problem. Okay, I agree, your thing solves the problem, but is that a problem worth solving? Does anyone care? Is the way that you're solving that problem better than a manual way of solving that problem, like using audio transcription, right? I know for example, usually write notes during an audio transcription session, right? And I do that because my notes are easier. They bring out the relevant points than I think a machine ever could. So you immediately have in me a resistant user that's like, well, I'm not going to pay for something that automatically reads a conversation when I can just write down my notes. And by the way, that's free, right? That's free. I don't have to pay anything to do that. So now you have to be 10 times better than me writing down notes in order for me to use your product. And so, like thinking through that and thinking through the strategy of how these people are, or how these entrepreneurs are thinking about the problem tells you a lot, and how they say it, because it's not good enough to just say, here's a problem and I solved the problem. Well, that's great. There's a million problems in the world that need solving, and I'm very happy that you've solved one of them. But is the problem that you're solving worth solving? Is it something that people really care about? And that's a hard question to answer. Very hard.
Very interesting. And you started putting angel checks, and then you transition to a syndicate. Is there a mindset change which is needed to transition? You talked about putting a deal notes and all that, but was there a significant mind change when you were handling money for other people when you're trying to build a syndicate?
Yeah, I mean, I think so. I mean, I think when you are doing, and I do this for my own deals, like when you're actually doing a deal that is very much dealing with other people's money, you have to have much more of a sense of a fiduciary duty, right? And so it behooves you to go very deep into a deal, right? So what I typically do is especially for a seed deal, if it's a Series A deal, then I'll usually run it through my AngelList syndicate, because Series A, you have metrics, you have proof, right? They're very de-risked once you get to Series A. Still some risk, but very much de-risked. If you're talking seed and pre-seed, I usually fish to see if there's any interest from my group, because the pre-seed deals and the seed deals are the hardest ones to get LPs for, but the deals that you're most likely to get into as a small-time investor like me, because the CEO doesn't, like with most money, if the CEO could get Andreessen Horowitz's money, he would, or she would, right? But since they cannot, they are more than willing to talk to me to see if they can get my money. And so the pre-seed seed deals are where I can get into deals. And so, but the challenge with that is that LPs look at it and they're like, well, you don't have revenue and you don't have product, so why should I invest? And I'm saying, well, you should invest because I think this is a good deal, and here's why I think it's a good deal. And so you have to go through that fiduciary duty and say exactly why you think it's a good deal, and do that research.
Interesting. You talked about founders investing through you, because there's an article from an investor called Todd Sacerdoti, who's a CEO of Pipedream, who talked about that he's a VP of product in a company, and he can provide a lot more value because of him being an operator and not a full-time investor. Do you think since you're an operator in a product role in a company, you can add on more value to a founder? Because there's been
absolutely.
That VCs don't add value. I'm just wondering, as an operator, since you also run a fund, do you think what's the sort of promise you can offer to a founder?
Oh, absolutely. I mean, product is one of those areas that touches all other areas. It touches sales, it touches CS, it touches support, it touches the founders, it touches strategy, it touches really all parts of the organization, are and of course engineering, the most important part, maybe. So, it as a product, you get a lens into all other parts of the business, right? So I have a good lens into my current startups go-to-market, right? Our go-to-market strategy and what we're planning there. And B2B SaaS is very often very much about your go-to-market strategy. You do need a product, and the product has to do what it says. But the B2B SaaS market is so saturated, right? The chances of you actually presenting something new that no one has ever done before in B2B SaaS is very, very unlikely. What is more likely is that there's an existing, very ancient incumbent, right, that everyone hates, that everyone would love to get off, but no one has provided an alternative to them, right? That's usually far more common in B2B SaaS. And so as a product person, I'm able to look at that, your strategy, and say like, okay, you're either going to come up with a go-to-market strategy that says you're creating something new, right? And here's why it's new, or you're doing a hand-to-hand combat against an existing incumbent. And if you're doing hand-to-hand combat, your strategy needs to be very different than if you're deciding to create something new. All from your investment in branding to your investment in how many AEs you should hire to how should you be thinking about your website, right? All of that is something that I can help with, as a VP of product, right? Because I get exposed to those go-to-market aspects, and that's not even aside from the engineering aspects, right? How do you architect a product? What are the features that you should be focusing on your product, and how do you link customer value to those features that you're building? Right? That's what a product manager does fundamentally, and all of that I can help with too. And so product is one of those rare areas where I think you can add a lot of value, especially for a founder or for an entrepreneur.
So interesting. And wanted to talk about your syndicate. How much of an allocation do you ask for each deal from the founder and from your fellow investors?
Yeah, so generally in terms of the allocation, I can, it's really more constrained by my LPs, what I can raise for my LPs, as opposed to what the founder is willing to give me. I recently did a Series A deal in a company called Databook, which your audience can look up. And the founder asked me, he said, I can give you an allocation of $1 million. Can you fill it? And I said, I don't think I can fill an allocation of $1 million. I said, I can take a zero off that. I can do about 100,000, which is what I ended up doing. I ended up doing a little over 100,000 in his Series A, which was a fantastic investment. They're on track to do some really good numbers. And so, it very much is a case of Series A, I can do an allocation of about 100, maybe 200K if it's a really hot deal. But other than that, it's really about 100 and below is what I do for Series, seed or pre-seed is what kind of the allocations that I'm looking at my level.
And how do you give the updates to LPs? Do you give it's like a quarterly or a monthly cadence that you?
Yeah. I try and I'll share whatever updates the CEO gives me, right? And so CEOs are constrained for time, so some CEOs are more communicative with their LPs. But any update from the CEO that's shared with me, I share with the LPs. And also, I try and do, even regardless of that, I try and stay in touch at least yearly with the startup, so that I can at least do a yearly summary of for the LPs of how their investment is going. And it's hard because like sometimes you'll put your money in and you won't hear anything until the startup either fails or exits. And sometimes even if it fails, you won't hear about it. And so, it's important to keep those communications up with LPs and keep my name in front of them. I now, I'm planning to do a quarterly newsletter for my LPs, just with my thoughts on B2B SaaS, right? And generally staying in touch with them as much as I can, for their investments, and generally trying to be have good fiduciary duty with the money that they've given me to invest.
Interesting. And another thing which I've seen on angel syndicates is like a lot of co-syndicated deals with other syndicate leads, and that I've heard really helps in building traction. And but do you share deals with other co-syndication model?
Oh yes. I haven't done one yet. but I'm very, very open to the idea, because once you co-syndicate a deal, you get access to all their LPs as well. And so it's a great way, and naturally you have to share carry in that case, but that's usually a good price to pay to, because my aim is to help the entrepreneur, right? And if the entrepreneur wants to raise, 500,000, then I would probably go into a co-syndicate situation, where I could leverage the LPs of another group as well, but that would be kind of my idea with co-syndication. I'm very much in favor of co-syndication. I think it's a great idea.
Yeah, no, I think that's super useful. And I had Peter Livingstone, who also runs a popular syndicate, which is called Unpopular VC, and he said that that the next Sequoia could be the AngelList syndicate. Do you agree on that statement?
That's an interesting statement. I mean, everyone likes to predict the disruption of venture capital, but the funny thing is that I read an interesting article the other day that said crypto, which everyone said was going to disrupt VC, is actually being financed by VC now. If you look at who owns most of the new startups, the protocols, it's all centralized in a few hands, and that those hands are usually the old guard, of VC. And so I think that, I think a lot of people will graduate, from being AngelList syndicates into being true VCs, but I don't think it's necessarily going to disrupt the VC industry. I think a lot of people, but there's a lot of flexibility that you get from the AngelList syndicate method, and the exposure that they give you to LPs as well, is really quite massive, that a lot of people don't want to raise their own fund. I have a lot of friends that have raised their own funds or tried to raise their own funds after doing syndicates. It's not easy. You would think that, just because I've done a successful syndicate, I can immediately raise a $5 million fund. It doesn't work like that. The way that institutional money will look at you when you're trying to raise your own fund is very different to how individuals look at you, and how they're willing to give you money, right? And so even some very well-known VCs, syndicate leads I know, have tried to raise funds and failed, simply because they don't have the traditional VC track record that you need, because once you do have that track record, then it's easier to raise your second fund, your third fund, your fourth fund. But to raise your first fund is very, very difficult, even coming from a syndicate. So
yeah. And that's my follow-up question, Nathan. Do you look yourself to transition into a full-time VC role, or would you want to be an operator and run this?
I'd love to do VC full-time. If anyone's willing to give me an LP that's willing to give me a couple million to go out and spend, I would love to do VC full-time. But I have a friend that raised his own first fund. He's now raising a second fund, and he said to me, Nathan, I finally feel relaxed that I can start paying myself a salary with his second fund. And so his first fund, which was about 5 million, he couldn't pay himself a salary, even from the fees from a $5 million fund. And so I would love to do it full time, but in order to do it full time, you really need to have significant numbers in terms of your fund to therefore generate your operating expenses, right? And so I think it'll be a while before I can do that, but I would love to do it full time. I think there's nothing more fun than investing. So.
Yeah, no, I totally understand that. And I quickly want to do the top three. What's your favorite business book?
My favorite business book? Oh gosh, I have it right here actually. It's Brad Feld, Jason Mendelsohn, Venture Deals. So I don't know if you can see it. Oh, this is a podcast, so people can't see it. But Brad Feld, Jason Mendelsohn, Venture Deals, and this was the first book I read when like how to raise money as an entrepreneur, and both from the VC perspective. And this was invaluable in terms of like how to raise money and all the things to think about, and the structures and these weird things called options and how those work. And that was the best book that I'd ever read, I think, on the topic.
Interesting. I had Brad at my, I think, the 89th episode, and I think he's one of the nicest people who've come, and big fan of Brad.
This is what you realize. The earlier that you invest, the nicer you tend to be. The later you invest, the more of an asshole you tend to be, because in the seed game, everyone's kind of got to be friends with everyone else, because I mean it's too early to be prima donnas about anything really. But I've noticed that once you get into Series A and Series B, especially you get to real VCs that do investment, that's where shit gets cutthroat. And then they'll say things like, I'll bring a deal to a VC and say, oh, so do I get anything for bringing this deal to you? And they say, no, you get nothing for bringing this deal to us. And I'm like, really? Like, because I don't even get carried. No, you get nothing. We share nothing. And I'm like, well, okay, I'm not bringing you any more deals, and so but that's just the way. That's later rounds. That's just the way things work, right? The more allocation that you get, the more percentage you get of the company. That's the bigger exit they get, and they've got a return that they have to give to their LPs and their funds. So I can understand why they're so cutthroat.
Yeah, I totally understand that. And if you could go back in time when you started investing with Flight Ventures and Swell Ventures, what is the one thing you would have focused on or done anything differently?
Wow, what's the one thing I would have focused on? I would have honestly tried to have more conviction in my opinions. When I was initially investing, I was like, oh, I'm investing $5,000 and, will I ever get it back? And that was a lot of money to me at the time. And it still is a lot of money for a lot of people, but the one thing that I would go back is to have conviction in your opinions. If you truly have done the research, if you truly have looked at something, don't worry about what other people think. Have conviction in your opinions and back it with money. Right, because if I had not invested in that Salesforce acquisition, I would have probably thought, wow, I really don't know anything about investing. But that proved that I know something. I still may not know a lot, but I know something. And especially if it's a domain that I know, like CRM or B2B SaaS, I probably know a lot more than another person, right? Yeah. And if I can capitalize on that information asymmetry, then I have an edge in the market, right? That other people don't. And that's what I say, that's why I don't trade a lot in public markets. I put my money in stocks and bonds and, I keep everything safe. But, I don't play stocks because my belief is that someone on the other end of that trade knows more about that trade than me, right? And if that's the case, there's probably a Goldman Sachs analyst that's thinking, wow, like I'm doing this trade and I'm just, completely making fun of this other person on the other end of this trade, because I know more than they do. And they probably do, and that's why I don't trade stocks or do day trading, because, I just feel that it's not a market in which I can have an edge. Whereas this, I feel I can have an edge because I do it as my day job. So
yeah. Super interesting. And do you have any favorite online tools, example, Gmail, Slack, Zoom?
No, those are all the regular tools. I mean, obviously I go for cheap and free. So I use MailChimp to keep in touch with my LPs. I use the AngelList platform, right? I use Squarespace for my website. So just all the regular tools that any small business uses, I use. I've looked into CRM for VC firms and things like that, but those are too expensive for me at my kind of level, so anything cheap or free I'm willing to use. Anything that costs money, probably not. So
yeah, no, I think that's a good one. We'll put that in the show notes. Nathan, what is the best way people can reach out to you and know more about Swell Ventures?
Yeah, please go to either my website, dnc.services, or just email me at nathan@dnc.services. That's D for dog, N for Nathan, C for cat, .services, Nathan@dnc.services. I want to hear from anyone that would want to be on my deal flow. I syndicate everything that I see. Everything that I see, you'll see. So, and obviously any great deals, if there's entrepreneurs listening to this that want to pitch me an idea, just email me and I'm willing to listen.
Awesome. We'll put that in the show notes, Nathan. Thank you so much for taking our time and speaking to us. I really enjoyed my conversation with you.
Yeah. Thank you, Rohit. And I look forward to hearing the podcast.